We also made a very simple calculation on the comparison of card payment costs and instant payment costs. These cost comparisons are based in publicly available terms and conditions of MasterCard, and I took OTP Bank small business packages as an example. So if we compare the minimum and maximum fees for card payments and credit transfer costs, then you can see that the difference is striking. The maximum can be, for example, almost 3% for card payments, and it is the maximum for the instant payment cost, and request to pay is approximately 0.5%. This translated into various transaction sizes. You can see, as Olivier also mentioned, that for small payments, the credit transfer and the card payment costs are comparable. If we are increasing the transaction size, then the card payment will be substantially more expensive compared to the instant payment and request to pay service. I added the two factors together, so the explicit time factor and the explicit money factor in terms of the payment costs. And you can see that comparing or adding these together, the rates for the savings are similar, so it approximately can be 1/3 or even less than third of the costs when we are talking about paper versus the digital invoice processing and card payments substituted by credit payments. I just added also together the whole assumptions, and you can see that on an annual basis, an SME company can easily save more than 10,000 euros just adding together these costs. 10,000 euros might not be, very significant, but still it matters. And if it matters for a company with let's say 1 million euro B2B transaction volume, then you can imagine if we increase the numbers, then it can be a sizable saving on the SME side. So I thought it would be important to visualize these numbers, because we always talk about the advantages, but if we never visualize it and never make the calculations, then it is very easy to skip it over. When you see these numbers and how striking the difference is, then I think it makes sense to start thinking about really serving these SME segment with this integrated offer. Mm-hmm. I also put together a calculation on how the working capital financing is affected in the paper-based and the digital case. If we take invoice processing as an example, if we take the paper-based processing, it can easily take more than 3 months to get the money for the SME customer versus 17 days if we go on the digital route. I assumed like normal or market standards for the processes of each step. And you can see that just by decreasing the process times, this can mean a significant saving for the SME company. We can, if we calculate with the cost of equity funding need, working capital funding need, then you can see that the cost of working capital is less than a fourth if we take the shorter times caused by the digital invoice management processes and digital payments. If we couple this together, then the cost of receivables from financing go from 20,000 euros versus in the digital way, it is less than 4,000 euros. And if we assume that the bank could finance this SME, if it had this digital solution, which also provides an opportunity to finance the SME customers based on invoices and invoice data, then the bank misses 2,000 euros interest income just on a single SME if it doesn't finance it.